Hey, what's up, good people? Welcome back to Stock Up with Larry Jones. Hey, at the end of this video, make sure you check out all of my links, okay? Hey, do me a favor. Go ahead and hit the like, subscribe, and notification bell. Yes, I'm going to continue. I don't care when I hit 1 million. I'm still going to ask you guys to keep me out there because when you hit that like button, it does help YouTube to keep me alive. So small thing to do for us making a lot of money and saving a lot of money. I got a lot to talk about today, so I'm going to get right into it. A lot of you have been asking about, hey, what stock? What stock? What stock are you in? What stock are you in? What should I be buying? And you've been asking about the $5 a day, $1 million cup of coffee. And so I'm going to cover it all today, all right? Anything I say is not a suggestion for you to buy, hold, or sell a stock or a crypto. I am not a financial advisor. You have to do your own due diligence, okay? Got to say that, good people. And make sure you don't fall for any spam. I will never talk about a WhatsApp, a broker, or this one is making me all of this money. That's all spam. I will never ask you to send any money or any crypto anywhere. This is free, good people. Free 99. All right? So let's get right into it. So the Fed did talk today, just like we thought. When the Fed gets in front of Congress, it's pretty much a dog and pony show. So he has to play nice. This is all politics, good people. So he played really, really nice today. So nice that we had some rebound of the loss the day before. That's how, because I thought it would be, remember yesterday I said I thought today would be flat to slightly green, which I was kind of right. But it got a little more green than I thought it would because of what the Fed was saying. He was playing really nice. Now, what he said was more dovish, meaning less aggressive, than the minutes that were released, which was more hawkish, which means more aggressive. So the minutes that was released last week was aggressive. That's when they say hawkish. That's what it means. But then when he talks in front of Congress, he was meek and, well, we're going to do this. So the market reacted more positive to that. Now, tomorrow, be careful because the CPI report comes out tomorrow, the Consumer Price Index. That comes out tomorrow. That measures inflation. We all know inflation is high. I think it's going to be a negative thing for the market, but the market may have priced it in already, all right? So we have to understand this puzzle keeps changing day. You think you're building a puzzle of a bear and it winds up being a cat because it keeps changing. But we're going to keep changing with it so we can continue to make money, right? So we know that energy is making money. We know that banks are making money. We know that biotech is making money. We know that healthcare is making money. Energy meaning oil. We know those sectors are making money, right? Now, that does not mean that you just blindly pick. You have to pick the right companies within these sectors. So here, this is one of my energy plays, EOG Resources. It's up 4% today. Now, if you really want to get in, good people, I would suggest waiting until tomorrow just in case it goes down because the banks, all of these have been getting hit when everything goes down. So yesterday, all of these positive banks and energy, they all got hit too. So I would just kind of wait and see what happens tomorrow. If they dip, then you can buy in, right? So energy, EOG. Here's another energy company, Chevron, with oil. Okay. This is an energy ETF. This is an energy. If you just want to buy energy rather than buying individual companies, not an ETF, but this is a spider. This is actually XLE, is what this is. XLE will be the ticker symbol for this one. All right. It's the Energy Select Sector Spider Fund. It's a fund rather. So the letter X the letter L as in Larry, the letter E as enough. So look into that if you don't want to pick the individual companies, okay? So then banking. C is the ticker symbol for Citigroup, and JPM for JP Morgan, right? Now, I'm a little heavy, and make sure you rewind and go back to those. I'm a little heavy in banks. I'm a little overweight in banks, but hey, I don't care. I'm making money. After the Fed, the first interest rate hike, then I'm going to start trimming my positions in banks, taking that money, and then buying down the beaten down stocks. Okay? So let's keep it going. PayPal. Look at what PayPal did today. That's PYPL, PayPal, I believe. Look at what it's doing today. Okay? It's killing it. And then Bank of America, BAC, is up a little bit today. Goldman Sachs, GS, Morgan Stanley, MS. What I did was I just bought them all, and they're all green. And then I'm going to see which one performs the best. And I am heavy in banks right now. Probably a third of my entire portfolio is in banks right now because higher interest rates, banks are going up. Okay. Now, I was looking for biotech, and I'm probably going to end it right here. I don't want to keep going. I want you guys to do your own due diligence. I was looking for biotech, but I stumbled upon something that I want to share with you guys. Okay. I stumbled upon this IDN, IntelliCheck. Okay. IntelliCheck, a technology company, develops, integrates, and makes threat identification and identity authentication solutions for retail and bank fraud prevention. Okay. And so that's what they do. All right. I want you guys to look at this. I didn't say buy it. Look at it. IDN. The reason why I want you guys to look at it is it's a very interesting company. And then when I go to Tip Ranks, by the way, this is Tip Ranks Tuesday. I have a link below for Tip Ranks. Click the link, download it, and pick the package that is good for you. It's going to help you guys make money. All right? Tip Ranks. But check this out. Look at where it is, which is $4.97, right? Which is very cheap. But look at the upside potential. Now, mind you, these were 2 months ago, right? 2 months, 2 months, 2 months, 12 months. But look at what these Wall Street analysts say that could happen to this stock over the next 12 months. 146% upside. All right. There's a lot. I didn't see the PE on it, but it's interesting. All right. 146% is something to look at. All right. That's all I'm going to say. And so I want you guys to look at this stock. IDN. Remember, IDN. So this is Fidelity. And what I like about Fidelity is within your profile, it allows you to make separate accounts under one profile. I'm doing this for my Larry Jones, and I'm going to call it the Larry Jones $5 a day challenge. And I'll get back to that in a minute. Look at this. So I like it because it allows you to break it up. And those of you that have your other platforms, I'm pretty sure you can do it, but this is what I use it for. I use my Fidelity for. So here's where I'm going to put my ETFs in. Remember, here's where I'm going to put my blue chips. And here's where I'm going to put my growths. I'm not going to be going over my EVs. I actually have those in another broker, and I'm going to move them over to here. And this is just a good way, if you got a lot of stock, to be able to just go to one sector and see how it's performing. Because it's impossible to really keep an eye on 40 different stock, okay? And so that's what I wanted to show you guys. And this is how I'm going to track and share with you my $5 a day challenge, okay? And so if you don't have a broker that you can use to follow, I would suggest Fidelity. This is what most people do. Okay? When the stock market was green, running up at all-time highs, this is what a lot of us were doing. We were buying the stock near high. Tell the truth. Like my grandmother used to say, tell the truth, shame the devil. Come on, raise your hands. All right? We are not going to make the mistakes of 2021 and 2022. We are not going to make the mistakes of 2020 and 2022. We are going to learn from our mistakes and we're going to make more money, right? This is when the market is beat down, which we're not at the bottom, but when the market is beat down, that's when we're going to do this. So we're gonna let everybody else be in this line. All of the dumb money is gonna go into that line. I'm not calling it dumb money. That's what Wall Street calls it. But we are gonna be in this line, buying stock at low during fear. All right, and that's how we're going to get to financial freedom, because we're going to do the right things at the right time. All right. Hopefully this video helped you. I'm going to leave it right there. I got so much I want to share with you guys, but I just got to break it up and just kind of feed it. So remember, be ready for your $5 a day. Hopefully you're saving it. I'm going to leave a video right here. Watch the video if you haven't seen it. My $5 a day challenge is going to be right here. Now, what you could do, if you only have $5 a day to invest, I'm going to be investing $5 a day into all of these stocks. But if you only have $5 a day, literally, all right, 5, 10, 15, 20, 25, 30, $35 a week, you only have to buy in whenever you get paid. So if you get paid once a week, that's when you buy. If you get paid every other week, that's when you buy. But make sure you calculate your $5 per day if that's all you can afford. And I would suggest not just buying one sector. So meaning, don't just buy all ETFs, all right? Or don't just buy all blue chip companies, okay? So, or don't buy all high growth companies. I would mix it up. So for those of you that only have $5 a day, $35 a week to spend, if you take $38 at the end of the month, right, times 4 and invest it into 4 different stocks, that still equals $5 a day for those of you that can only afford it. All right, we are going to change our trajectory. We're going to change the way we do things, and we are going to make money. And I'm going to end by saying this. This has nothing to do with if you were already on a $5 a day challenge from last year. So the metaverse is more of a big thing now than when we started the other one over 12 months ago. The metaverse wasn't a big deal then. Now it is. So I'm adding more to it now. Okay. So if you understand. All right. So, but then there's stuff like Ford. Okay. There's stuff like Ford that I'm still buying every day. I'm buying 3 shares of Ford every day. I'm buying a share of GM every day. And that has nothing to do with the $5 a day challenge. So just keep that in mind. All right. So you still got your other stuff going on. So look at Ford today. Okay. I'm still buying a couple of shares of Ford every day. And because Ford is killing the EV game. All right. And if you look at it, it's just been, this is a month. Look at what Ford is doing. This is 3 months. Look at what Ford is doing. Okay. And so I just want to put things in perspective and get a clear path. There's still day trades to happen. There's still swing trades to happen. There's still major investing, but the $5 a day challenge is just something separate because we do that consistently all the way through. All right, good people. I'm going to leave it right there. Make sure, please, that you check out all of the links below. All right. Make sure if you don't have a platform to do your swing trading, download the Webull app. I'm telling you, I don't care if you got 3 other broker accounts, download the Webull app, because swing trades, we're going to continue to kill it. And deposit $1, they're going to give you up to $3,300 worth of free stock. And then for your crypto, hey, we got Coinbase below. But today, because it's Tuesday, check out the tip ranks, because it's going to help you make wise decisions. All right, we're going to leave it right there. We'll see you next time. Live, love, laugh, and learn.